you can pretty much do the whole structure from Panama. So you can have one foundation on top and then subsidiary companies, and then you have a separate software development company. Now, we frequently work together with BVI and Cayman. It might be the case that for this specific project, hey, I want to run the company from Panama, but I want to have a Cayman foundation, right? Or I want to have a Panama foundation, but I want to do the token launch from BVI. Now, from the offshore side, they are subsidiaries, so the foundation would hold 100% of the shares of that token issuer or front-end company. If you want to have like an extra layer of protection or separation between them, you can have one foundation with a subsidiary company for token launch, and then a separate completely foundation with a subsidiary company for the front end, for example.
Welcome to the Accountant Quits podcast, where we help accounting and finance professionals learn how to manage a business using crypto. The world of Web3 is global, but when it comes to launching your project, where you incorporate matters. One jurisdiction that's rapidly rising in popularity is Panama. Panama currently has no crypto-specific regulations, meaning Web3 projects don't require government authorizations or licenses. While unregulated, these activities, however, are fully legal. And with 0% corporate tax on foreign source income, Panama offers a unique legal sandbox for innovation. But it's not without its trade-offs. From banking limitations to reputation risk, there's nuance behind the headlines. To guide us through it all, I'm joined by Edgar, founder of Pacifica Legal, a crypto law firm that's helped over 270 Web3 entities incorporate in Panama. In this episode, we'll unpack the Panamanian triangle of token SPV, foundation, and labco, tax obligations for founders across jurisdictions, DAO structures and governance, and how Panama compares against places like the Cayman Islands and BVI. Whether you're a founder exploring international incorporation or a DAO operator considering your legal setup, this episode is your legal guide to Panama's role in Web3. Lastly, if you're new to this channel, I'd really appreciate your support to help us grow by liking this video and subscribing. Now enjoy my conversation with Edgar. Edgar, welcome and thanks for taking the time to be here.
Thanks for having me.
To start, can you share your background, how you first became interested in blockchains, and the origin story of founding Pacifica Legal?
Yeah, it's an interesting question. I think I'm not like the OGs that got in 2013, 14. I have been in the space in the last, let's say, 5 years, so beginning of 2020. I'm a Panamanian lawyer, so I did my LLB there. I started my own practice. And then I started to get busy, but then I wanted to have a master's, so an LLM. I applied to a couple of scholarships. I ended up going to Moscow. I lived there for 5 years, ended up doing a PhD, more on traditional aspects, international private law, investments, arbitration. And while I was there, I was getting into more on the crypto trading side. And I remember telling my brother, hey, I want to buy some Bitcoin. How do I do it? And then I realized, hey, if you want to do it, you just might do it yourself. So I kind of got involved into this. Along this side, I continued my own practice. A lot of it's incorporating corporations and foundations. So you can pretty much do this from any place in the world. And I remember when I was doing my PhD, as part of the courses, you need to teach classes to master students. And one of these classes was something like current issues of international private law. And I remember when I had this course, there was nothing current about it. So when it was my time to teach, I took the flexibility and I was, giving what I actually was interested about. So anything about DAOs, NFTs were popular at the time, crypto blockchain regulation. I remember even doing like a moot court, you are a Ripple defendants in this case against the SEC, tried to make some arguments about it. I also started being an advisor to a couple of companies. One of them was more a traditional company in aviation, but they had a startup that was related to blockchain. So They were trying to do tokenization of aircraft and sales and acquisition of aircrafts on the blockchain. And at the same time, I have been getting clients interested in Panama for incorporating foundations and companies. I started getting more involved into the blockchain law aspect. So started going to meetups and also associations. And in one of these associations, the Blockchain Lawyers Group, I met my current partner in the law firm, Teresa. Shout out to Teresa. She's also very into crypto, also part of a bunch of different associations. And the funny thing is that we actually went to the same university, but we never met. We never spoken to each other, but we found each other again in this crypto space. And we decided, hey, let's partner up together and build this.
Very cool story. Now, Edgar, I want to start the episode around the regulatory landscape in Panama for Web3 companies and basically what makes Panama an attractive jurisdiction today. So, Panama currently has no VASP regime, and it doesn't impose specific regulatory obligations on companies offering crypto services. Could you walk us through how Panama evolved then into a popular jurisdiction for Web3 projects and share a bit about the historical context behind its crypto friendliness?
Right. So if I can give you like a quick regulatory recap on crypto regulation in Panama. So currently, as of today, there's no VASP regime, there's no crypto regulation or any law that covers crypto-related activities. So as such, cryptocurrencies, crypto assets, tokens are not considered to be legal tender or securities or a regulated activity. So you can pretty much issue, trade, sell, distribute, airdrop a token, or operate a crypto-related platform, whatever that be. It can be a DEX, a perpetual trading platform, borrowing and lending protocol, without the need to having to be licensed or regulated. So the approach of the local regulators, and by local regulators, I mean mostly the Superintendency of Banks and the Superintendency of Security Markets, so the Panamanian SEC, is that because there's no a law in place, they cannot oversee, regulate such type of activities until there's a law in place. So you can pretty much operate in a legal yet unregulated way without having to have a license or an approval or registration.
All right. Now, I mentioned in the intro that in terms of tax obligations, so project registered in Panama would have no corporate tax on foreign source income.
Mm-hmm.
That means also, of course, outside of Web3, but that means if your customers are not in Panama, you pay 0% corporate income tax. Also, there's no capital gain tax on disposal of crypto. But I want to ask you if you could go through the tax implications for the company's founders, right? So, for example, CFC rules require founders to report on registered foreign companies, and they may impose additional tax obligation. Or also go through then the concept of place of effective management, where basically the tax residency of a company and its obligation to pay tax is based on the place of effective management, right? So I know this is jurisdiction specific as well, where the founder is based. So could you explain it maybe if the founder is tax resident, let's say in the US?
Yes. Yeah, I mean, tax is, of course, a really attractive topic and interest reason why you want to set up an entity in Panama, but it's not an all-in solution, right? And also to, let's say, finalize the point on regulation, there is at the moment a crypto bill proposal in the parliament right now. It's essentially like a VASP regime bill. And it's not the first time that this has happened. To give you a bit of context, there has been around 12 projects of law that in some way touches crypto. There were only one VASP regime approved around 2021-22. So initially, there was a VASP law set up to the parliament. It was approved. Then it was first vetoed by the president at the time. Then it was sent back to the parliament, approved once again. And then it was declared inexequible, which essentially means like null and void by the Supreme Court. So then after that, we kept again without regulation. Now this year, another project of law was presented to the parliament. I'm not a big fan of such project. I think it still needs a lot of work to be done. And first, I don't think that the project is going to pass. In my opinion, it doesn't have the industry or the government support, so from the executive. And for these type of regulations, you really have both industry and regulatory bodies merged together to present well thought project that is good, then going to be accepted. So this is pretty much like a unilateral case of one of the deputies that presented this project. And the second point is that even if approved, the current version of the project, Article 2, under the scope of application, it only states that VAS regime would apply for companies offering services within the territory of Panama. So essentially, if you set up a foundation or a company and offer services outside of Panama, you also be carved out of the scope of application, which is 99% of the cases that our clients have. Now, back to, let's say, taxation and why Panama. I think Panama has naturally been like a financial hub. I mean, we have been dollarized since 1904. It used to be a big financial center, more than 100 banks at the time. I think maybe 10 years ago it was like 93. Now it can be something like 60. It's still a lot compared to the region. In Latin America, it's still one of the biggest concentration of banks and financial institutions. But it also comes to the effect that there's a large movement of mergers and acquisitions and concentration of banks. So you have fewer but bigger players. Then there's the component of regulation, or better say the lack of regulation. So the easiness of being active and ready to operate almost immediately, as opposed to having to wait, 1-2 years to get a license. And of course, it has some additional cost that is involved. A lot of these crypto Web3 companies, they don't have an MVP yet. So they need to prove their use case that this actual product works. So I think it's a good step for companies to decide, hey, let's test this product first. Once we have some funding, once we have some users, then we can get into getting regulated, for example, or just keep it as unregulated if let's say the current VAS regimes also doesn't align or it's not particularly fit to the product that you are trying to put out there. Now, to the question of taxes, indeed, the most important principle in that regard is the territoriality principle. So any income that the entity produce outside of the territory of Panama is considered non-taxable income as long as it is produced outside. So you would not need to pay corporate income tax on that. That is on one side. And then on the other side, on capital gains, especially when it comes to crypto, there's also zero tax on capital gains. Same principle whenever the sale of these crypto assets is done outside of Panama, then in principle, it's considered to be non-taxable.
And on the question related to like founders, is that though like a complicated topic to discuss because it's jurisdiction specific, right? On whether they'll have additional tax obligation in their jurisdiction where they reside.
Right. It's a huge and important point. And so now we're talking about minds and management of those entities. So the place of effective management of that offshore entity. And then the second point is, what is the tax jurisdiction of those founders? It's a very important point. Then if that jurisdiction has very strict and high CFC rules or anti-tax avoidance rules. So we always recommend having a conversation with your local tax lawyer or accountant so that you can have a feedback on this. And I would say, yeah, because there are different type of nuances, right? So I think one of the good questions that you can ask them is, first, let's say that you have a DevCo and that DevCo is onshore. What is the best type of legal entity to set up that DevCo? Then from the outside perspective, what is the tax categorization of the offshore entity? So that Panamanian foundation or corporation, that entity going to be treated for tax purposes. Then again, the question about what is your local control foreign company rules, or even maybe some reporting obligations that you need to have. If you have an offshore entity, you might need to report that. If you have a bank account outside of your country as well, if you have another residency, these are all type of things that you need to ask before and going for the structure. And there are different ways, let's say, to mitigate this, right? So there are different ways and levels, approaches that you can take. So I would say, let's go for the worst to the best. So the worst case scenario is, let's say, if you are a tax resident founder in a jurisdiction with high CFC regulations and anti-tax avoidance rule like France, Germany, US, and so on, and then you just appear directly in the company as one of the directors, for example. So this is like publicly available information. Everyone has access to it. It's an easy target to go after, right? It might very well be the case, as it happens, that nothing happens. No one really cares about this. But if it's a huge project, or at least you have a huge revenue coming from this, then you might need to think about these type of questions. And a lot of the times, whenever that happens, is then they want to take everything retroactively, but it's very difficult to do it. If that founder is on the other side in a more tax-friendly jurisdiction, then it doesn't matter really. So you can perfectly be appointed directly because there are no CFC rules about it. Then the second layer would be, hey, I don't want my name to be out there in any of the public documents. And also, just for general knowledge, the information that is publicly available, it's that of the directors, but the shareholder is not publicly available information. The second best option is, hey, I want to have local nominee directors. So you typically have a nominee directorship agreement with those directors. They will receive instructions from you as a client to do or not to do something, as long as that something is not illegal, but you would have still control over them. Now, this is the big question, because such type of agreement can be considered that because you have nominee directorship agreement with them, then you can be considered that have effective control over that entity. And since you have control, then you would be taxed as if you were doing the business locally. And then I would say, like, the ideal scenario would be, hey, let's set up these entities with local independent professional directors. They would have their own decisions. And then you can even go further after that and have like a local office, local employees, some types of local presence. Now, to have some type of economic substance, from the Panamanian point of view, it doesn't really matter or care. It's more from the outside perspective. Now, we need to be mindful, because at the end of the day, founders are mostly outside of Panama. So yeah, Panama doesn't have economic substance regulation, but most or a lot of the countries outside of Panama have such type of regulations. So these type of questions, then it would benefit or go against your case. So if you have, let's say, local independent directors, you have a presence, you have employees, for example, it's very hard to make a case against that you are actually having some type of control over the decision making of that company or foundation.
Before we continue, let's take a quick commercial break to talk about something that every Web3 accountant, DAO operator, and finance professional can relate to: the chaos of on-chain data. Managing blockchain transactions can feel overwhelming when starting out. Fragmented wallets, scattered protocols, and endless spreadsheets that just don't add up. That's why I'm excited to tell you about our podcast sponsor, Octav. Here's how Octav can change the way you work. Under a single platform, Octav pulls together data from your wallets, custodians, and DeFi protocols, meaning you don't have to jump between tabs or apps. Also, you can instantly generate key metrics like wallet balances, protocol positions, and total funds by category or network. Everything's organized, clear, and ready when you need it. And lastly, if you need to share data with your team or accountant, you can export everything as a PDF or CSV in seconds. The best part? Octav doesn't just show you the numbers, it lets you add context with transaction notes and categories, making reconciliations, audits, and reporting a breeze. This isn't just about saving time, it's about taking control of your data so you can focus on what really matters, growing your Web3 organization. But hey, don't take my word for it, try it out for yourself. Head over to octav.fi/theaccountantquits and get 14 days for free with all their pro account features and discover how Octav can transform your crypto operations today. Now, a few weeks ago, we had Jonathan Turnham from Nextlaw explain company structures when launching a token, and he went through the widely used token SPV in BVI and Foundation in the Cayman Islands. Could you go through the Panamanian legal setup when launching a token, and again go through the token SPV, the Foundation, and the LabCo, how it works?
Yeah, shout out to Jonathan. He's a good friend of ours, a great crypto lawyer. Yeah, so I'm quite familiar with his structure. Again, I think a lot of these type of structure, it's a development type of case. So I think that they have evolved over time, and as also regulation evolves at the same time. So I remember at the time, maybe 2018, like Malta was popular, Gibraltar was popular, then like Estonia, Lithuania, Liechtenstein, then came, like UAE. Yeah, like a lot of trust you would see at the time. And I think you start to build some type of industry standards. And there is not really one, but if you can say at least like the very basics, it would be, for example, Cayman, BBI, or Panama. So there's a lot of flexibility into that. Normally, you would have a foundation on top. That foundation can either be a Panama or Cayman foundation. It holds the rest of the subsidiary companies. It is typically a ownerless foundation, so it doesn't have direct owners or shareholders. It has, however, its own legal personality, so it can sue, be sued, have rights, or engage into contracts. It also has a specific set of purpose. So any of the assets or proceeds would go into a private interest, and that can be, for example, the development advocacy of blockchain protocol XYZ. It is also the entity that typically holds the protocol, manages, holds the treasury, and also interacts with the DAO if there's any. And then you would have either one or two subsidiary companies. So let's say that you are doing a token launch, then you would have SPV for the same purpose, for the token generation event. That is the token issuer/seller. And that company can be either in BVI or Panama. And the purpose is to isolate that liability of token launch, all the liabilities that it entails, right? So it is the company that would sign the investment contracts like your SAF or token purchase agreements or whatnot. And then it can also be a separate subsidiary company that it's running that front end. Yeah, we can call it like a platform operator. So it is the entity responsible for the GUI front end layer. That entity is going to be in the terms of use, privacy policy of the project. It also depends on the project, right? So if you are talking about, let's say, hey, I want to run this crypto platform, but I don't have a token, then you can perfectly have one foundation with a subsidiary platform operator, right? If you also have additionally a token, then you can have another subsidiary for that token issuance. If you're only interested in the token issuance, then one foundation with a subsidiary SPV for the token issuance. And so it really depends on the case by case. But for example, I would recommend having a front-end company for things like a DEX, perpetual trading platforms, bar and lending protocols, and so on. And then you will have a development company, right? So standalone entity that it's providing services to that offshore group.
Got it. Can I ask you, so when you were talking about, so you said the token SPV can be in Panama, but can also be in BVI. The foundation can be in Panama, but also can be in the Cayman Islands. But I want to go through maybe the use cases where everything is being done in Panama, like the SPV, the foundation. And I want to ask you, You mentioned subsidiary. Are these companies related to one another? Do they have controlling interest in one another?
Right. So you can pretty much do the whole structure from Panama. So you can have one foundation on top and then subsidiary companies, and then you have a separate software development company. And now we frequently work together with BBI and Cayman. It might be the case that for this specific project, hey, I want to run the company from Panama, but I want to have a Cayman foundation, right? Or I want to have a Panama foundation, but I want to do the token launch from BBI, right? From the offshore side, they are subsidiaries, so the foundation would hold 100% of the shares of that token issuer or front end company. It also, if you want to have like an extra layer of protection or separation between them, you can have one foundation with a subsidiary company for token launch, and then a separate completely foundation with a subsidiary company for their front end, for example. And then at the DevCo level, that is completely separated. So at DevCo level, it is no way connected by way of ownership to that offshore group. It is only connected by way of commercial agreements.
Got it. Then could you walk us through how funds would typically flow from the token SPV to the LabCo?
Right. Yeah, I mean, for these are all these type of agreements, right? So it also depends on the case by case basis. It can be, for example, a software development agreement for the creation of the token or the platform or maintenance of the platform. It can also be a more broad type of agreement like a MSA or providing consulting services or sometimes marketing services as well. So a more broad, not necessarily pure DevCo agreements. It can also be like an IP licensing agreement. So you can have all of these types of agreement between your onshore entity and your offshore group.
Now, how fast can you set up these Panamanian entities, and what's the cost involved for registration and annual maintenance?
I would say it is pretty fast. After we receive KYC documents, it would be around 3-4 days to incorporate the entities. That for both foundations and companies. For in the case of corporations, in Panama, what you do is that you incorporate the company first and then you issue the shares of that entity. And that would typically overall would take 1 week maximum. And then about the cost, it's normally around 2K for entity. And then everything that you would need, it's on top of that. So whether you would need nominee directors, are those directors going to be involved? How involved are you looking to have independent directors? So it depends on that case.
Got it. Next, I want to go through what is a Sociedad Anónima. So
Right.
can you explain what a Sociedad Anónima is and the difference between a private interest foundation and basically for which structure would this Sociedad Anónima be used for? Is it the LabCo, the token SPV?
Right. Yeah, so Sociedad Anónima, Anonymous Society. Yeah, so it's corporation versus private interest foundation. I think, to be honest, in my opinion, private foundations, and particularly in Panama, is one of the best vehicles there for asset protection, liability protection. I mean, it was firstly introduced around 1995. So I think in June of this year, it has been the 30th anniversary of the law. And from the Panamanian side, it was actually a merge between the Liechtenstein, Luxembourg, and Swiss private foundation laws at that time. And they kind of merged together and took the best out of everyone. But what I have to say is also that it democratized these type of legal vehicles. Because let's say like in Liechtenstein, you would have to have like 50K to be able to get access into these type of products. Also, if you want to get like a Swiss bank account, you have to have a couple of million of dollars. And in Panama, you with 5K, you can also have access for these type of legal vehicles that are very important and useful. I mean, these type of foundations, they naturally came for estate planning, asset protection, and also kind of like a substitute for inheritance. So they came for this background, and I would say it democratized and make it accessible to everyone. But they kind of were repurposed to be used in this type of Web3 decentralized project, especially consider that it doesn't have any shareholders, because you in companies would have fiduciary duty to the shareholders. In a foundation, it's a legal entity of its own, but it's set up for a specific purpose and to the benefit of the beneficiaries. Now, to your question, what are the differences? So the way you can think about it is that a private foundation is a merge between a corporation and a trust. So in Panama, both foundations and corporations, they have legal personality, while trust, they don't. It's just a contract, right? And when it comes to the registration requirements, at the same time, foundations and companies needs to be registered in the public registry, while that is not mandatory for trust. I would say also that one of the biggest difference is whether it is a for-profit or non-profit entity. So companies are naturally for-profit legal entities, while foundations are still non-profit vehicles. Now, it doesn't mean that they won't have money, right? So you can have like foundations and let's say like NGOs that have millions of dollars in management. But then at that foundation level, you would still have to put it back into what are the purposes of that foundation, right? So that foundation can still do commercial transactions and activities, but it needs to be towards the purpose for which the foundation was created. The other difference would be, for example, at the management executive level. So in corporations, you would have a board of directors. And in Panama, the minimum is 3. It can be either legal entities or individuals, while in the foundations, the minimum is 1 if it's a legal entity, or 3 if they are individuals. And these directors are called the Foundation Council, and the members, the Foundation Council members. What else? Which type of vehicle would be used for each of the roles? So, in my opinion, at least, for token issuance, it would be a company. To run that front end, I would also use a company, especially if, for example, the platform is generating fees, whether that is from a form of commission. And then for the DevCo, I will also use one company. Now that DevCo can be in Panama, but that's not typically the case. We normally recommend having that closer to the jurisdiction of the founders, or if not, then to incorporate it in a neutral, tax-friendly jurisdiction.
Got it. So that Sociedad Anónima is not really used for like Web3 companies.
Sorry?
The Sociedad Anónima is not really used for Web3 companies, if I understood correctly.
No, Sociedad Anónima, it's corporation. Yeah, the thing is that if you translate it like literally, it's called like anonymous society. So it's just a weird form, but we normally call it a corporation. Whenever you're talking about a corporation or company, it's normally, technically speaking, a Sociedad Anónima.
Got it. Okay, that's clear. Now, I want to go through another topic, which is around bearer shares. So just to give some quick context for the listeners. So bearer shares, as opposed to registered share, they are when ownership is not registered to a name. Instead, the person physically holding the share certificate is considered the owner. Bearer shares are quite restricted and banned in most countries due to their misuse on money laundering or tax evasion, but Panama still allows bearer shares, but they must be immobilized with a registered custodian. I want to ask you, how does Panama treat bearer shares today compared to registered shares? The process for the custodian to hold that certificate, typically in escrow, and then what would happen when you sell or you transfer your shares?
Got it. I mean, in my opinion, bearer shares in Panama, it's a thing of the past. It's not really used today. It's still possible to use them, but I would say from the large majority of companies in Panama, it's a very little set of companies, more all companies that used to have them and they continue to have them. But nowadays, most of the companies have nominal shares as opposed to bearer shares. If you decide to have bearer shares, you do need a custodian. That custodian would still need to have KYC on you, identify the UBO. And if there is any change of ownership, then you will need to notify that custodian. So I think practically speaking, it's not really that suitable of an instrument as it used to be. I think after, and it's been a long time since then, I would say, I think it was the law 47 of 2013. So after 2013, 14, 15, they were completely, like almost eliminated, I would say. And also practically speaking, if you have nominal shares, it's also not a requirement to be registered. So you can have nominal shares under your name. Those shares are not going to be registered in the public registry. It will still be kept as a private document. Yeah, so I would still go for nominal shares. I think it's like more of a standard now.
Now, when preparing the episode, I researched what DAOs have set up a foundation in Panama, and I came across a famous example of Sushi Swap. So back in 2022, Sushi DAO passed a proposal to use one Cayman entity and two Panamanian entities. The Cayman Foundation is responsible for Sushi DAO's activities related to on-chain governance and off-chain activities. These include administering their treasury and grants. And for the Panamanian entities, there's a foundation responsible to administer the Sushi protocol, including all their smart contracts. And then there's the corporation that manages the front-end development of the protocol, like the LabCo. So you've already explained, the Panamanian Foundation, but for listeners navigating a DAO foundation setup, maybe could you walk us through what's different to what you have already explained when setting up a DAO in Panama?
Yeah, I think it's a great example. I think even after Sushi, it was, I think, 2022, Panama started to get more track, and it has been increasingly an attractive jurisdiction since then. Yeah, so I think every law firm and every lawyer has its own opinion on how to set up and structure things. And I think at that time, they were still kind of exploring what is the role of each of the entity. I would still concur that, let's say, a Cayman Foundation for governance of the protocol is a good idea, and that the front end would be run through a Panamanian company, for example. That's perfectly fine. Now, when it comes to the protocol itself, there's a big debate on how and where to deploy it and so on. It also depends on the jurisdiction, right? So in some jurisdictions, the deployment of that protocol, especially if it's something related to, let's say, like a perpetual trading platform derivative or a borrowing and lending protocol, it might be considered a regulated activity. And so I think in these type of cases, it's useful to have a separate subsidiary entity that is only responsible for that protocol. Now, that whether that it's a foundation or a company, I would say I would go for a company in this case. But again, you as a lawyer, as a crypto lawyer especially, you still want to be very flexible and to try to to discuss things out and what is the best type of structure to propose to your clients.
Now, what are the implications if the DAO makes distributions to their token holders, like in Panama?
Well, I think that is one of the specialities and difference of why doing it through a corporation or a foundation. As I said before, you would always have in a corporation, especially like based on case law, that the duty of that company and the directors running that company, it is to the shareholders. But what about DAOs? Not necessarily the shareholders of company, right? But you can also still have some type of rights or votes over the decision making of that specific project or protocol. So I think in that sense, having a foundation in place is very beneficial to kind of unilaterally provide a specific set of reward, for example, for a token holder, as opposed to a company.
Before we continue, let's take a quick commercial break from our sponsor. If you're serious about running your business using crypto, you need tools built for crypto. One of my favorite apps, and yes, one that I use multiple times a month, is Request Finance. This app has been a game changer in how I invoice my clients and receive stable coins and crypto directly in my wallet. But hey, there's so much more to it. Request Finance is the all-in-one platform for crypto operations. Accounts payable, accounts receivable, expenses, and even accounting. Plus, they've got a killer multi-pay off-ramp to over 190 countries, meaning you can pay someone with crypto and they get fiat in their bank account. Request Finance connects to over 20 blockchain networks, including Ethereum, Solana, Base, Arbitrum, Near, and more. Here are some features that I love. Batch payments using your preferred wallet of choice. A single dashboard to track all invoices with real-time updates. All invoices contain the transaction hash for easy audits. But hey, don't take my word for it. Try it out for yourself. Head over to requestfinance/partners/theaccountantquits and get 2 months for free with all the pro account features. Join 3,000 finance leaders today using Request Finance and make crypto operations simpler, compliant, and less stressful. My next question is probably something you get asked a lot, and I'm sure the listeners would also love to know, is the difference between then a Cayman Foundation and a Panama Foundation. So we talked a bit about the Panama Foundation, but the Cayman Foundation is used quite a lot. And could you walk us, like, if you had to summarize like the differences between a Panama Foundation and Cayman Foundation, what would those be?
Right. So it's a good question. I mean, I'm not a Cayman lawyer, but from my experience, first, it's the type of entity. So in Cayman, you would have Cayman Foundation Company. So it is an exempted company by guarantee normally, where you have members, and then those members would resign, effectively becoming an ownerless foundation. So in Panama, that is not the case. So the type of entity is technically called a private interest foundation. So it's an actual foundation as opposed to a company. And that would also maybe affect some aspects in terms of taxes and how these entities are treated onshore jurisdictions. You know, if you're looking at, let's say, a company, then you need to ask about CFC and anti-tax avoidance rule. Then if you are looking at, let's say, being a beneficiary of a foundation, you can possibly look at inheritance concerns or taxes as well. So, I mean, it depends jurisdiction by jurisdiction, but it would also be related to not necessarily legal, but tax questions. The other difference, it would be, for example, the directors. So as I said before, in Panama, the minimum of directors is 3 legal entities or individuals. And I think in Cayman, it's only 1. The other difference would be maybe the filing process. So in Cayman, normally it's the secretary that is responsible for the filing of the entity, while in Panama, it's more of a responsibility of the resident agents, so us, law firm. Then the big important difference would be economic substance. So you would find economic substance regime in both Cayman and BVI, while Panama still doesn't have an economic substance regime. They only have something along those lines for a multinational regime company. So multinationals that wants to establish in Panama, they still have some type of regulation or a couple of provisions along those lines. But in general terms, there's no economic substance in Panama. And so I think if you look at the law and what it's accomplished in terms of legal protections and so on, it's pretty much similar, in my opinion, at least. I think the differences are more of practical implications. So I would say one of the things would be, let's say, reputation or familiarity, especially with investors. So like Cayman Islands has been naturally jurisdictions for investment funds, while Panama doesn't really have that reputation, right? The other would be kind of the services providers. So the level of, let's say, sophistication and complexity of the providers in Cayman, it's very high. Like I know a lot of providers, whether those are accountants, law firms, and so on, from Cayman Islands, and it's very high, as well as the regulators. And I think in Panama, it's still a bit hard to find a good provider that really knows what they are talking about. And I would say we're one of the most, if not the most, like active law firm in this niche in Panama. I think it's also a matter of how developed and mature the market is. So you would have a lot of these specialized providers, let's say in Cayman BBI, because it has been a popular destination jurisdiction for already a couple of years, 5, 6, 7 years, while I think Panama has been getting more popular recently. So I think also providers are trying to catch up into what is the best way and really understanding this type of products and clients.
Now, I'm not the expert on this. Obviously, you are. I'm trying to figure everything out as you're speaking, Edgar. But the main value prop of that Cayman Foundation is that it offers this ownerless foundation. And probably that's why the Sociedad, like everything related to their on-chain governance, is done through the Cayman Foundation. Does that mean like, yeah, the DAO setup would not, like Panama would not then be a popular place for the DAO setup because it cannot be an ownerless foundation?
So this is not the case. You would still have a lot of foundations used to either wrap or interact with DAOs from Panama foundations. And also, it is still ownerless, memberless foundation. So in a Panama foundation, you would have three main, let's say, personal elements. You would have a founder, which is the person that makes the unilateral declaration to create that foundation. Then you would have the executive body, which is the foundation council members, so kind of the board of directors of that entity. And then you will have the beneficiaries. Now, the beneficiaries, and aside of that, there are two main documents in terms of the legal constitutional documents. So you have the Foundational Act, which is kind of the charter and constitutional document. And then you would have what's called reglamento, which is translated like your bylaws. So it's kind of a more detailed but private document where you can state, for example, what are the assets that hold the foundation, how are they going to be managed, distributed, etc. And within that, you either have two options. You can expressly state who are the beneficiaries of that foundation, or you can keep it open-ended and only state the way in which beneficiaries are to be appointed. So yeah, to answer your question, you can still use Panama foundations for DAOs, and it would still be ownerless foundations with no direct shareholders or owners.
Got it. Thanks for clarifying that. Now, as of 2025, so Panama remains on the EU's list of non-cooperative tax jurisdictions, although it was recently removed from EU's AML, high-risk third country list in June 2025 and the FATF grey list in late 2023. So reputation concerns still exist, but it's clear that Panama has made a lot of progress on transparency and compliance. So I want to ask you, in practice, do these reputation risks affect Web3 projects incorporated in Web3, maybe when it comes to attracting VCs or banking or transacting with other parties in more like regulated jurisdictions?
Right. I think a better question to ask is, why isn't the biggest money launderers in the world aren't in that list? I mean, maybe it's like a personal opinion, but I think that's the biggest question to ask. And if you really think about it, then it can give you a bit more context, right? So, I mean, I think, to be honest, a lot of these lists have been used to apply pressure to countries. And it's kind of a cartel, right? If you control a route and then you have a competitor that is also using this route, you might want to eliminate it or at least cripple them. So I think it's a good analogy to put into Panama. So it's not like, I mean, of course, there's anti-money laundering rules, but in my personal opinion, it's more about attracting more capital into their financial centers, and more than anything in reality. And in terms of reputation, yeah, so Panama has received a huge amount of pressure, I would say, after 2015, not even when we were included in the list, but before that with Panama Papers and all of that. And yeah, we were included in the FATF list, then we were removed from it. We also get recently removed from the AML European list, while still remain the high risk jurisdictions. But how really it affects crypto? Not really. So a lot of these companies, they don't really have bank accounts, for example, or they do it in some type of way. So It depends on how the project it's planning to run. So some of these clients, they decide, hey, we want to have everything on chain and that's it. But even in that aspect, you still have quite a few options that people don't know. So Panama is actually quite crypto friendly. I would say both the people on site and also the government. So it's kind of, they have maintained neutrality and also kind of a laissez-faire approach. You have, in terms of banking, a few options in Panama and also outside of Panama that work with Panamanian entities. And in terms of investment, I think it used to be a more of a thing in the past. And I think since it has been getting some popularity, investors are feeling more comfortable allocating money into Panamanian entities because there's already a track record of it. So it has been increasingly in popularity, but still have some reputation issues. Yes.
That's why I wanted to have you, Edgar, to debunk all these myths around Panama, because you're the guy who sees everything in practice.
Yeah, I can tell you
And
everything about Panama, the good, the bad, and the ugly.
yeah. And so you mentioned banking. Are there examples of that you could share around some crypto-friendly banks in Panama?
Right. So in terms of banking, there are two local banks that are crypto friendly. One called it's Tower Bank, and the other one it's called Canal Bank. Tower Bank was kind of the pioneer. They were really the ones that started this process from the banking perspective in Panama. Very crypto friendly, well, to one extent, but at least if you're opening, let's say, an individual account, hey, I want to set up an account in Panama with Tower Bank. Can I do it abroad? Yes. Can I change Bitcoin to USD? Yeah. So you can actually A, receive crypto related funds, and B, do the off ramp directly through the bank. So this is like a good option. And then kind of the competitor right now and more inclined to companies and institutional side, it's Canal Bank. And recently there was also the announcement, the mayor of Panama was in Bitcoin 2025 in Las Vegas this year. And he made the announcement that the second largest state bank, it's called Caja de Ahorros, it's also going to be accepting Bitcoin. Now that's not completely true, I would have to say. What it's giving is the ability for people to deposit Bitcoin, for example, and for that Bitcoin to be exchanged into US dollars in your account. So the bank is not actually holding like a Bitcoin wallet, but you are able to deposit Bitcoin and then convert it into USD. There was also the recent announcement of this same measure that you're able kind of to do the same thing for paying taxes in Panama, in the District of Panama. So you're able to pay your taxes in Bitcoin, I think also in stable coins, and I'm not sure if also like in Ethereum. So that's option number one. I will have to say it's still very painful. So it takes a lot of time dealing with local Panamanian banks. The compliance process is huge. Like I really, people talk about reputation in Panama, but if you really talk about like how practical things are doing it, like to set up an entity, you need to have, passport, second ID, taxpayer certificate or tax declaration, bank commercial reference, proof of utility bill or address. You can set up a company in Delaware today and without like even having to present a passport. And same with the banking, like they really take their time to go through compliance. And it's not really, I would say, only about the local banking sector, but it's also because of the pressure that they receive from correspondent banks. And where are the correspondent banks from Panamanian banks? They're all in the US. So this is why it's not necessarily the case that banks don't want to go ahead full crypto. It's just the risk that represents coming from the correspondent banks that are going to affect your business. Now, so this is first option. Second option is working with banks outside of Panama that work with Panamanian entities. And there's a bunch of them. You have a couple of one in the US, you have in Puerto Rico, you have in a couple of ones in Nevis, in UK, Switzerland. And you can also open corporate accounts with EMI, MSBs, which are not necessarily bank accounts, but for practical terms, you would have a corporate account. You would have a lot of the times the option to do off-ramp. For off-ramp, you also have a couple of different options. One of the sponsors, I think it's one of them, Request, which we use every day. So they also offer crypto off-ramp. It also works for Panama. You would have things like OneSafe, Cipher Wallet, and so on. And there are different options to do the conversion between crypto and fiat.
Yeah, those are good examples. So you said OneSafe, Cipher, and Request Finance. So given that banking is a challenge, I want to ask you, do you even then recommend Token SPV Foundation to have a bank account? Can they be fully bankless? Given that all these tools now that allow you to do off-ramping, so if you have to pay a vendor, you just use the crypto in your treasury and it just off-ramps. Like the tool takes care of the off-ramping and the beneficiary just receives fiat. So do you even need a bank at the end of the day?
So it really depends on the project. And also the ability to get the bank account would also depend more on the project. So it's not necessarily the case on whether or not they accept Panamanian companies. It's less about the jurisdiction. It's more about the business use case. So really understand what is the business, how are they generating revenue, and the financial profile. Here you're talking about minimum deposits, what is the volume of transactions, and so on. I would say it would rely and depend more on that than the fact that it's a Panamanian company. And also, of course, what are your compliance measures? So what type of AML, measures and controls do you have in place? Do you have an AML policy? Do you do KYC? Have you done KYC for your investors or not? Do you do it for your users? So it really depends on a case-by-case basis. If it's more, let's say, I would say like a centralized, a more traditional business use case, it would be easier to get an account. If you have a token, it's more a decentralized project, it would be more hard to get an account for you.
Yeah, perfect. All right, so we've spoken a lot then about incorporation in Panama, and I think now it's time to speak about Pacifica Legal. So in light of everything we've discussed, Edgar, could you provide an overview of the services that you provide?
Right, awesome. So I'm a partner at Pacifica Legal. It is a Panamanian-based law firm, and we are one of the most active law firms in crypto in Panama. We have incorporated, I think, by now more than 300 crypto-related entities, and our clients are, different, and they vary a lot. So anything from L1s, L2s, centralized exchanges, decentralized exchanges, borrow and lending protocols, perpetual derivative products, crypto wallets, meme coins, NFTs, like really you name it. And we do a lot of corporate structuring for all of these companies and foundations, then any type of token launch, so your SAF, SAFE, plus token warrants, any of the legal work that you would need, so terms of use, privacy policy, and intercompany agreements, as well as general legal advisory.
Perfect. And in terms of like onboarding, how would that typically work? Yeah. Do you recommend like founders just before coming to you to do some homework first?
Yeah, I can even send you like a guide on foundations that I have. I think that's really useful for people to understand it and what are the requirements, how are they used, and so on. In terms of onboarding, it's quite easy. We're quite responsive. I think also for crypto law firms, and I think that you need to be more quick and flexible. So we use a lot of Telegram, Signal, WhatsApp. I think that you also develop a more closer relation with your clients. And yeah, you would still need to have some KYC in place, but as long as your KYC it's okay and your screening it's right, then you're pretty much ready to set up your company or foundation.
Perfect. Edgar, we've spoken quite a bit. I have a last question, which is around compliance requirements, like for these Web3 companies in Panama. Yeah, what would be some of their annual filing requirements, taxes, financials? Is an audit also required?
Right. So it's a good question. In principle, audit is not required. In terms of filing, it would depend whether that company has activities in Panama or not. in the majority of cases for crypto Web3 projects, we typically recommend having these entities as offshore entity, meaning that they won't offer their services or products to Panama, but from Panama outside. We even actually recommend geo-blocking the country in some of these cases so that there's no argument that you're actually promoting or offering the services locally. So it's a completely offshore entity. If the income is produced outside of Panama, it's non-taxable income, so you don't need to file a tax return for that, but you still need to have your accounting records. So this also of the additional compliance requirements that was introduced. So every entity needs to have accounting records in place that would normally come in the form of a balance sheet and P&L. And for crypto, we also recommend, putting all of the crypto matters into that balance sheet or statement. And in terms of the accountant, that can be an accountant outside of Panama, or it can be also a Panamanian CPA. And there's no requirement for it to be a Panamanian. And that's pretty much it. That obligation, it's every year. So you would have until April of each year to present to us as resident agents a copy of those accounting records. So it's not a registration, it's just that you need to present them to the resident agent, and if required, then the resident agent needs to provide it to the authorities.
Perfect. Edgar, I'm seeing we a little bit above the 1 hour mark. I think we can wrap up the episode for today. As closing thoughts, has there been anything that we didn't go through that you want to share with the listeners, or how would you summarize the episode of today, and any advice for founders, DAO operators looking at Panama but not sure?
Awesome. I think something like keep it flexible and up to date. So for a lot of us, you have to have a flexible and creative mindset. So not all of the projects or products are the same. You really need to go deep and understand what is the product, who are the user base, how are they getting funded, to really understand and give the best strategic, legal, or tax solution for each of the cases. And also keep up to date with the events and the development of the industry. I mean, there's always, technology always moves faster than regulation, right? So, but even on the regulatory side, things are moving quite fast. So keep your eyes on what are the new trends in both the technology and also the regulatory aspects.
Perfect. Thanks for sharing. There's a last question that I usually ask to my guests before they leave. It's like a tradition. Edgar, do you have like a favorite quote or like a maxim that you live by? Not necessarily live by, but you maybe repeat it to yourself every now and then.
Oh man, I'm not a quote guy, but we can do it. As I said, keep it flexible and up to date.
Perfect. We'll put it like that. Thank you. And if people want to reach out to you, Edgar, or they want to learn more about Pacifica Legal, where should they go? Where should they reach out to you on socials?
Yeah, so you can reach out to us in our website. It's called pacifica.legal, or you can reach out to me in Telegram as well. I'm not sure if I should put my Telegram out there, but you can reach out to, I think, best through our website.
Perfect. Or LinkedIn, maybe.
Yeah, LinkedIn is okay also. It's Edgar Jan.
Perfect. All right. So thanks a lot, Edgar, and we'll be in touch.
All right. Awesome. Cheers.